YouTube Studio. Good morning, content. I'm live. I got to turn on my Do Not Disturb. We're going to monetize this mofo. On save. There we go. And boom. Morning, Chris. I got to get up on the mic. And yes, I shaved my head. I screwed it up. So it'll get fixed. It'll get fixed here over the next week or two. Earnings Hub. There we go. Let's see. Home. We'll go home on FinViz. We're going to go Market Scanner. Hung, long time no see. Welcome back. Things are going well. Good morning, Scott. Morning, Q-Tip. GME, baby. Retail is back. Morning, Victor. GME is going crazy. I mean, look at that. Let's look at it in the 4 hour, okay? Let's look at it in the algorithm, because what could you have done? Again, this is just TrendSpider. It's nothing crazy, but the algorithm got you in at 1044. You've almost doubled your money. You would have doubled your money on Friday, but I think you doubled your money because you're at 41% right now. 41%. This is definitely, I mean, I don't know if Melvin Capital is back in business, but it's 25% short. Did Roaring Kitty, let me see. He's on Twitter. I know he's on Twitter. Let's see. Is he on? He was posting some stuff. Roaring Kitty. Morning, Tyler. He is back. The Roaring Kitty. I saw this. You can see I like that one. I mean, he posted this on June 8th, and then he posted this. I mean, is this what made the stock go up? I don't know. I have zero idea. But just that, where you're sitting up to take notice. I mean, did that pop this 25%? Larry! I saw it. I mean, I liked it, and I thought, I wonder what's going to go on. I mean, let's look at, here, we're going to look at pre-market, display extended hours. And we're going to go to 5 minute. Because, I mean, it popped up to 20 pre-market. And by the way, FYI, if you're trading this, take a look. Because $20 is a nice support level that it's just bouncing off of. So if you're going to trade this throughout the day, which I've traded GameStop before. I don't have diamond hands. I am not part of the Wall Street elite, Wall Street bets elite, because I got the hell out. And I don't know why you would stay in, but that's your prerogative. But my cousin stayed in. Okay, let's see what kind of ad I got. Ooh, is this a Blue Chew or something? I'm going to skip it. I don't even know what the ad was. Your ad was ineffective, whoever that was, man on the beach. But yeah, GameStop is back. We're going to do some scans, though. scans. Oh, let's go down here. Let's see. This one. Dude, I posted this yesterday. This was a good hour-long podcast for the paid subscribers. I don't know. There is a story here. There is a story about GameStop. Let me turn on Do Not Disturb. It is kind of crazy. I mean, did that picture from Roaring Kitty, is that the only thing that popped this? It's still got a huge short position. I mean, it really does. And this could be an opportunity. I mean, listen, you know, I'm not 24.48. SMCI is up over 800. NVIDIA is up over 900. PenW is up back over 300. Somebody asked me about that. So it's good. I mean, let's do some scans. It's 9 o'clock. Market scanner. Let's do some scans here. Nothing in the core portfolio. Let's see anything in my brokerage holdings. Do Etsy. God, I don't want to get anybody into Etsy, but I still love that brand. Hate the stock, love the brand. And I've lost 5 figures in this one. It was a big win for me over pandemic. No, this is his official thing. And this was 13 hours ago. So that's the only thing. I mean, he hasn't changed his pin tweet. He hasn't done anything. Let's see if deep fucking value. Let's see. I mean, I don't know if this is the Roaring Kitty or not. It's got a little, a blue check mark, but you can never tell. Because this one has been actually active. I don't know what Pac Moon is. Is that a meme coin? I mean, he posted something. He posted under the Roaring Kitty, and I believe that this is his official. I gotta follow him. Can't believe I wasn't following him before, but I saw that. I saw the Roaring Kitty posted. I liked it. Oh, Wall Street Bets I should like too. So I don't know. It's an interesting one. Crypto Beth. We'll put that in there. Beth is one that crosses up almost every other freaking afternoon. We did core investments, so let's do covered call ETF, see if anything came up there. ACMR. I don't even know what ACMR is, but I think somebody had me look at it again. Energy stocks. I think I look weird with the dark hair. Just my thought. And oh, look at this. Leveraged ETFs. NVIDIA gets a NVDS. That's a short one on NVIDIA. That's a 1.5 times short. This one is a short, 2 times short. Interesting. Nothing that I would take a week before earnings, but interesting. Spider sectors, nothing. Let's see the watch list. There's going to be a couple on the watch list. Lululemon. Has Lulu hit bottom? Ooh, POWL. I said that yesterday. Cardinal Health. I said that yesterday. We got Lulu potentially. Powell, which is an alpha pick, coming back to the top. Resistance here at about probably 180. Trading at 168 pre-market. Cardinal Health, which has been in a downfall. Nice button hook area with confirmation. But that death cross does worry me. But every time you've crossed that 200-day, I mean, let's look at the weekly. Are you using that 50-day as support? Because every time, over the past 2 years, the 2 times you came down to the 50-day, presented a buying opportunity. Interesting. And then the Digital Ocean. Let's look at the chart as ACMR. ACM research. I don't think I disliked it. You got that gap on here on the 4 hour. It's kind of coming down. I mean, they had their earnings. Doesn't seem like it killed it based on the reaction, but definitely looks like it's an oversold territory. Let's go to okay, those will come up on the NASDAQ and stuff like that. So I don't need to write those down. Let's go to the Dow. McDonald's. DoorDash. I don't like DoorDash as an investment, but interesting. Let's go to S&P. They cleaned up these scan lists. Just McDonald's. Okay. I'll go back to the 4 hour. Yes. Bullish bites. Wada! Wada! Morning, Ben. Lulu's interesting. Lulu is definitely an interesting one. Here's the ACM research. Algo has you out as of right now. Algo makes you 20% on this one. Buying and holding makes you 88%. ACMR, let's see. Oh, yeah. It was Roaring Kitty. Yeah. Okay, we're going to get this one. I'm going to replace my Roaring Kitty. I'm going to replace mine with this. Yeah. That was it. So Q-tip, it was this tweet. GameStop after this tweet. Yeah. Diamond hands. I never sold. Buckle up, baby. Yeah. I agree with you, Ben. I think Apple's the most underrated play in this market. So ACM or research. It's got a strong buy. Let's see how Seeking Alpha Analyst. Only 3 authors covered it. So take that with a grain of salt. If you look at the Wall Street, 7 analysts cover it. They like it. 63% upside to the price target. You look at the revisions, 3 up, 2 down, 2 revisions down in the last 90 days. 4 up, 2 down in the last 90. This is the gamble with small caps, is you're kind of beholden to and yeah, so their gross profit margin 49%. Free cash flow, they're losing money. So return on equity 11%. Cash from operations, you're losing 54%. 54 million. That's a hard pill to swallow. So tomorrow at 1 p.m. I gotta tell her I can't make it. Not a horrible one, but John, I wish you luck. Okay. Let's see. Let's go to the videotape. We're going to go to Qs. And we're going to start out at the Qs. Home Depot's one that I don't particularly invest in. I don't buy. I don't necessarily look at it. I don't mind Home Depot, but hold on. Let me just go click out and go back in. It's messing up a little bit. Oh, the 4-hour algorithm here. This is the 4-hour here. 338, it got you in. 346. I can't imagine it's a bad report. Right there, I would say, yeah, you've got a little button hook and you've got an opportunity. 50 days still moving negative. That's a little bit of a kind of a, hey, we may have a problem, Houston. But it's not something that I would say, oh my God, I'm going to run the hills for. The algorithm, take the algorithm with a grain of salt. It's even. You don't make money over 2 years, over 31 positions. Buying and holding, you make 20%. So in that case, let's go look at the weekly. And I've said it before, it broke out above this. I said when you broke out above that range, take your profits, because the top portion is going to be about $400 where you're going to see some resistance. Morning, Google. So I in my mind, I think you're using that 200-day as a support level, because every time you've broken that 200-day, for the last 2.5 years, almost 2 years, 2 full years. Every time you've broken that 200-day, it's been a buying opportunity, but it hasn't been a buy and hold opportunity. It's been either an ad or something like that. And Damon's going to hate this because Damon works at Home Depot. So if you're listening, Damon, this is kind of your stock analysis. Now, I see this one, the MACD's crossing down and you've got it downward, and you've got, got to the 50 RSI. Plenty of times it's gotten below that. And so I don't know that this isn't just another little pump. But yeah, it's a little, and remember, Ben, I know you guys are chartists and technical. Remember, you want to touch 3 points. The more points you touch, the more validity that has. So if you were to just, let's click on this. And if you were to move this up from about 270 to say 276, that touches what? One, and you were to move this back here because that's where we're touching back there. So you touched on the bottom, you touched one. I mean, and these are weeks. So you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Say 15 on the bottom. You touch 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So you got 12. So you got 12 on the top. So I'd put a lot of validity into this channel. What you don't know is whether this is, considering it's close enough with the moving averages that I would say, hey, that's probably almost a double top here at 400. Is this getting ready to move to the next direction? And I don't know. I mean, Home Depot should not move from 346 to 400 in a matter of 2 weeks. And it shouldn't go there. It should maybe go to about 355, 356. And that would be a healthy kind of move up. So I'm not a huge believer in Home Depot. I do shop at Home Depot, but I think for me as a DIY guy, I'm going to Lowe's because they're cheaper, and I'm going to, and in fact, if you go over to Seeking Alpha and you look at Home Depot, and let's look at their peers, because I will show you the valuation on Home Depot is a little bit stressed, and just take a look at Lowe's. So we look at the market cap. Home Depot's twice what Lowe's is. Enterprise, twice what Lowe's is. Employees, Home Depot, twice what Lowe's is. Analyst covering, it's about the same. Wall Street analyst, 34, 35. You can see that the quant has both of them hold. Seeking Alpha analysts both hold. Well, why? Well, the valuations, both D's. Growth, both D's. Profitability, A+. They're making tons of money. Momentum, B, both B. Earnings per. But here's where you get to the not the trading, not the dividends, not the valuation. Look, PE for a full year. Lowe's is cheaper for forward gap. Lowe's is cheaper. You got the gap, the forward gap, forward peg. Peg, 3.39. Lowe's, 10.19. Lowe's is trading higher, so Home Depot probably has the edge in that one. That's the forward. Trailing 12 months, Lowe's is lower. So if you go and you look at the valuation of Home Depot, and we look at you want to look at that peg forward. That peg forward, 3.39. The sector median is 1.61. Now, it's ranked number 2 out of 7 in the home improvement stocks. Lowe's is ranked number 4. So I don't know which. I've traditionally liked Lowe's better. Betterware Mexico, BWMX, is the better one. A high rate of cutting their dividend. But look at that. I mean, look at that. If we look at Wall Street, there's one person covering it and $21 price target. So I'm not a huge Home Depot fan, so take that with a grain of salt. I don't know that I'd look at it. Yeah, the True Value, Ace Hardware are better. I get a $25 coupon for Ace Hardware all the time. But Apple, I really like. Listen, I've liked Apple at 170, and it popped up to 180, and it's up 1.25%. My portfolio is going to be skyrocketing today. Yeah, I have tens of thousands of shares of Apple. But Ben, remember, I'm just a douche on the internet. I don't know anything. I just make some, some pretty good educated guesses sometimes. So let me open up some of these links that I have. We're going to open up that one, but we're going to close that one. GigaCloud, Palantir we're going to talk about, NVIDIA with a buy rating, Verizon and MasterCard, Apple moves higher and Google lower. I got a good chart on BABA. I think from TrendSpider this was. Let's see. It's on Twitter. Yeah. Costco. I will be trimming Costco. I don't want to take the chance that Costco is going to make the pullback unless the member fee, and I'm not counting on the member fee, but unless that member fee gets pumped up, I'm going to be trimming on that one. That's Coin. This one, let's see. Yeah, these are AI power names. So those are interesting. Catalyst Watch, we'll kind of go over. Year-to-date sectors. I like this one, this tweet. ARMP. I'll look at ARMP once I open these up. This was a fantastic video. Jim Simmons. And if you don't know, the dude had a hedge fund, 62% average yearly return for 33 years. That is a legend. That is a guy you want to listen to. Now he has thousands of data analysts working for him. Yeah, and Peter Lynch, this is just talking about pullbacks in the market. That was fantastic. We're going to start out with Roaring Kitty's tweet. And we're going to open up that. But let's go back. I can't even read your name. I'm sorry. I think it's Middle Eastern. What are you saying about ARMP? Let's see. ARMP. I don't know what ARMP is. Oh, it's a pharma. I don't know healthcare. I mean, honest to God, I don't know healthcare. Looks like a nice earnings bounce and button hook here. 200 days moving a little bit sideways, 50 days still moving negative. I'd be worried about this one because when you had your death cross, you didn't move down. So I don't necessarily feel comfortable with that one. When you look at the weekly, I mean, I don't know why you'd want to get into this one. It seems to be putting in a floor. ARMP, let's see. It's probably too small for the quant has it as a hold. Wall Street says strong buy, but take that with a grain of salt because there's only two analysts. Now the price target is 158, but there's only two analysts. Now when you take the revisions, one of the two is revising low. So I would say stay the hell away from it. But this is one that it's a pharmaceutical. It's outside of my realm of possibility. If there's a drug that you know about it, or some protein-based medicine that they've got in the thing, have at it. But I don't like pharma. I just don't like healthcare, and I don't like pharma. It's a lottery to me, just based on FDA approvals. With that said, we are in a GLP-1 market, so if you want GLP-1s, if that's what they're going for, I'd be all in. But I just don't. I don't know that space. I don't know what that stock is about. So, Palantir's still down because it was up so much. It's using 20. Hey Jacob, I'm sorry if I couldn't see your name. My apologies on that one. And go girl. Here's Palantir. I mean, it's not done going down. It's up 0.39% in pre-market, But look at that run right there. This is coming for this gap at 20, 1969. Now, if you get under, start to fill this gap and you like Palantir, I would get in it. I'll include an article today that has a super strong rating on it, and they like it. I'll include it in the newsletter. So I particularly am out of this one. I don't own it. But when we look at here, we'll go to the weekly because I want to show you where everybody's holding. Because if we go back, if we pull this back to here, we're going to pull this back to where it really started dipping down below that $25, okay? Where it dipped down to this. Where's everybody holding? So if you look at the volume level, okay? If you look at this, here is the stock chart in weekly. This goes back to November 2021, where it was at its highs. It had just IPO'd down here at $10. Remember, this was a SPAC, and it IPO'd, and it came out. I think it was a SPAC. I'm not 100% sure, but I'm pretty sure it was. But this got hyped up to about 30. It hit, I think, 45. 45 was its high. And then it kind of settled into this $25 range. And that was where it kind of settled. It would go up, it would go down. And then you had rising rates. And this one wasn't making money, got killed. So if we look at this from November 8th, 2021, and you look at where people are holding this stock from that point, where are they holding this stock? They're holding between $7 and $8. So are people worried when you're going from 25 to 20 when you're holding at $7 or $8? No. That's where people are holding this stock. And look, it put in this nice shelf between February of last year and May of last year during that earnings time frame, put in that, and then it started its move up. Now, in the last earnings between February and May, you've put this nice little, sideways here. Traditionally, when you put in that little sideways, this looks very much like this one, where you went from 21 and then you closed before the next earnings and you went down to 16. So do I think that 16 is in this one? No, but I do think that under 20 is in this. So this is one company that I will trade that until that 25 becomes support, which it will at some point in time. Until that becomes support, I'm not willing to look at this one and say, oh my God, I want to get into it. I'm going to wait till it's under 20. So that's my my thing. But it will hit 25 again. Understand, go girl, it will hit 25 again. You may have to wait 2 years. I don't know for sure it's going to be this year. The likelihood is that it will be this year, but it will hit 25 again. Just plain and simple, it will hit 25 again. You'll get back there. So here's the cues. Where are we? Okay. I'm going to hit the record button. It's 9:30 because it takes me a while to record this. So I'm going to get going on my notes. Good morning. Happy Monday. Monday, May 13th. It's not Friday the 13th. It's Monday the 13th. So news announcement. I am going home tomorrow for Mother's Day. Tuesday, Wednesday, Thursday, you will not have a podcast unless I decide to get on and do some audio stuff just because I want to, but I'm spending the time with Mom. So expect this podcast to cover you for the week. This simple as that. I mean, you guys don't need me in the morning. You know who you do need? Roaring Kitty. Roaring Kitty tweeted this, 15 hours ago? Yes, yesterday at 8 p.m. Yesterday at 8 p.m., what's that? That's a man sitting back in his chair with $13 million worth of GME stock, sitting back and moving forward. And that's his first tweet in a very long time. Here's the article. Roaring Kitty's return amps up meme stock, Animal Spirits. What did it do to GameStop? 40%. We're at $25 a share. Yeah, $25.68. When I came on about a half hour, maybe 45 minutes ago, we're at 23. We're at 25. I mean, if you want to trade that stock, go at it. I will listen. There's a lot in the newsletter. There is a lot of this education section. If you want to get into trading some type of GameStop stuff, just sign up for my paid newsletter. I have all of the education. What's confirmation? What's a MACD? What's the button hook? What's the algorithm? What's a cross up? What's RSI? What's Bollinger Bands? How do you trade this stuff? That trading using candlesticks, day trading, swing trading, or long-term investing, you get all of that stuff in the paid newsletter. Now, if you were on this weekend, I posted 2 paid newsletters. I did a creating my alpha picks portfolio with 5 stocks to buy on Monday. And there's 5 stocks in this article. I will not show those 5 stocks to you. I showed all 5 to the paid newsletter. It comes with a free 7-day trial. So if you got FOMO and you want to see those 5 stocks, sign up for the newsletter. And then what did I do? I did a special podcast for everybody for the paid newsletters yesterday. I did a special podcast and I recorded it. And it includes the entire Alpha Picks portfolio. Why those 5 names? Why not the other 15, 20 names? I don't know how many are in there, but I did it over Zoom. You got to ask me questions. That's the benefit of the paid newsletter is you get full interactive Zoom sessions with me, sometimes on the weekend, sometimes around earnings, sometimes stuff. But if you're interested, you can sign up for the newsletter at dailystockpick.substack.com or go over to Linktree. The link is down below, linktr.ee/dailystockpick. And you'll see it's right down here, Substack, Daily Stock Pick newsletter. The newsletter is absolutely 100% free during the week. And I will be doing newsletters while I'm at home. They might be a little bit shorter than normal, but they will be while I'm at home. Remember, it's about mom. So Tuesday, Wednesday, Thursday is about mom. I'll be back on Friday. So let's take a look. Where are we on the Qs? Well, we've talked about it before. That 407, it still provides us support. I do not trust this rally 100%. I think we may be coming back down below 440 at some point in time. In pre-market, we are up. Let's see. The Qs are up 0.34%. There's just not a whole hell of a lot in this rally. But we do have confirmation. The 50-day starting to move forward. The 200-day still up there. But when you take a look at the weekly, and the weekly is key, we're kind of pushing to those all-time highs again. And I highlighted this back in last year, where in October we almost pulled back to the all-time highs there, and we just pulled back down. You can see the RSI. We moved up, in stock price, but then we move back down. And I think this is very similar. So if you're long-term, what do you want to do? You want to just add dollar cost, your average, your way. And when you see a pullback and stuff goes on sale, you want to add to that. Let me close this. And part of that is this video. Take 2 minutes out of your day. And if you're subscribed to my newsletter, go over there and watch this Peter Lynch video. It is about buying stocks on pullbacks and what you have to do. It is an absolute masterclass on that. So when you see a little pullback in QQQ like we saw here, you don't want to say, oh my God, I got to get out. Oh my God, I got to. No, that is the wrong message. The message is, hey, I want to buy this on sale because historically the market has gone up. Yes, and he talks about all of the market pullbacks, the percentage of pullbacks that you have, all of that stuff. He talks about everything, and it's only 2 minutes. Now, if you're really interested in making money, this video from Jim Simmons, who passed away, he was in charge of the, I forget which fund it was, but he was in charge of a fund that over 33 years made an average of 62% yearly return. And he says it's 4 minutes. He says it's not very hard. It's not very hard when you have 500 data scientists feeding you that stuff. He even said, they asked him what the algorithm looks like today, and he's like, yeah, it's probably just way too much for me to actually explain, way too hard. But he said at the beginning it was looking at undervalued stocks, and that's all he did. That's all he did. Look at undervalued stock. If you have 4 minutes, go follow me on Twitter and take a look at it. And if you don't know what my Twitter is, it's over here on Linktree. It's up top. All of the social medias are the icons up top. So if you want to watch that one, I suggest you watch it. This man knows what he's doing. He's a billionaire. He just passed away. RIP, blah, blah, blah. If you are invested in any of the chips like NVIDIA, ARM, Qualcomm, Taiwan Semi, Applied Materials, AMD, NVIDIA, Micron, Broadcom, SMCI, Dell, ANET, Marvell, any of those, read this. This is the roadmap how top semiconductors are driving the production and new digital economy from Shea Boulard. Yeah, Shay's just a master, so you should follow him on Twitter. But this is it's 2 seconds to read, and you should follow him. But you should also, if you're investing in this area, 100%, you need to know what these companies do. So read that, do a little bit more research. I think it was good. Here, this is the market performance by sector so far. Remember when XLU was one of the, it was down here with real estate. It was negative. It's now the third best performing sector in the S&P. Technology is 11%. Communication services 16%. Utilities up 10%. Energy up 9%. Financial 7%. Where is the technology? It's 11. Technology is still 11%. Everybody's bashing technology. It's still 11%. It's still 11%. So I don't think that you want to, throw the baby out. Remember, Roaring Kitty just tweeted, we got animal spirits here. These are things you want to watch for by day. This is a great, this is called Catalyst Watch. I think it comes out Friday afternoon. It came out March 10th at 3 p.m., which was Friday afternoon. This is a great one. I mean, it just breaks down by day what you want to look at. Petrobras, notable earnings due, Tencent Music. That's all today. Microsoft backed OpenAI is expected to announce an AI search tool. That has been thrown out. Over the weekend. OpenAI said, no, we're not going to do it. Does it mean that Microsoft isn't going to start putting some of their stuff into Bing? No. And remember, Google has 98% of the search market. So even taking 1% of that away would be a ding for Google, but it would be a benefit to any other company. So I do have Microsoft and I do have Google in my portfolio. Tuesday, we have Baba, Home Depot, Sony, Flutter Entertainment, which is an interesting one. Options trading implies double-digit share price swing for Rumble and Jack in the Box. Shareholders of Cord Energy will vote on the deal with ERF. Jerome Powell speaks. On Tuesday, shareholders of Carol's Restaurant will vote on proposed. MSCI will announce the results of May 2021 index for the equities index. Earnings watch on Wednesday. Cisco, Grab, Monday. Hut 8, which is a crypto miner. Marathon Digital CEO Fred Thiel will be one of the featured speakers at DC. This is how in-depth this goes. Thursday, earnings watch. Walmart, that's the big one. That's the only one reporting this week that's in the core portfolio. But you got Applied Materials, Deere, JD.com, Baidu, Take-Two, Under Armour. All day Cummins will hold its analyst day. And then Friday, you've got all day. The Go Shop period ends for Prism to acquire The 4-day National Retail Association show will begin in Chicago. Again, retail, it's all in that. So, I've got a bunch of stuff. Now, there's a couple of things that I wanted to point out. And this is, TrendSpider pointed it out here, and I've got a couple of other names to add to it. VST, NRG, CEG. These are power names. They're powering. They're still in the earning innings. Don't sleep on these AI utility names. Again, power is important to AI. And I've got a couple of other names, PWR, ETN, GEV. I'll post the charts in the newsletter. But those are interesting ones that I think you should keep an eye on. I may start a watch list on TrendSpider for it. So if you're subscribed to TrendSpider through my program, but I'll send out that link so you can add it to your watch list and use scans and things of that sort. Coinbase sees a wave of analyst upgrades as price wedges into the 100-day near 2-year highs. This is interesting. I mean, again, this is the power of TrendSpider in what you can do. Look at these analyst upgrades. Those are all analyst upgrades as it goes down. It's an interesting one. Coinbase in the 4-hour algorithm, let's take a look at it, because remember, in the 4-hour algorithm, you can do ETFs, you can do individual stocks, you can do any stock that has a chart, even Bitcoin, you can do all the crypto stuff. It works. Now, the 4-hour algorithm in coin makes you 75% over 2 years, 30 positions, so about once a month. 254% if you just bought and held 24 months ago. I've said it before, I'll say it again. That 192 is a support. Do you want to start adding here? I would say no. The algorithm has not gotten you in. But in pre-market, let's see, we are up 0.22. It's at 201. You closed at 201.22. 201. Oh, I'm sorry. This is actual live trading because the market opened. 201 is where you're at. I would say that 192 is the start of where you want to add to it. Just so happens the 200-day is there. You want to be careful because the 4-hour is moving, the 50-day is moving down. Where are you on the weekly? You don't have a 200-day yet. You're still moving down on the weekly, but the 50-day is moving up. The 9-day is moving up. It's using that 21-day as support. The MACD still super high. The RSI is at 53, so be careful. I think that's an interesting one that TrendSpider points out. Now, Costco is currently trading 40% above its 100-week SMA, because this is a weekly chart. Only happened twice in the last quarter century. In 2000, let's see, we're going to show more. In 2000, corrected 57% in 6 weeks. In 2022, it corrected 33% in 6 weeks. 2024 is this time different. I would say this time is only different if we get a member increase. But I would argue that because we're this far up on long-term charts and you've had this far of growth and you've got a May 30th earnings, I'm going to start trimming. And the reason is, look at this. You're at 787 there. You're at 781 right now. Did you hit 787 today yet? Let's see. Yes. You opened at 788. Your high was 78.88. And it started to pull back. I will be trimming this name. And it's not because I hate the name. It's because it's become incredibly overbought at 73 on the RSI. It's coming off of 79. The MACD is super high. Yes, I'm selling it right before earnings. Walmart earnings are on Thursday. This one comes out after Walmart. Those are the two retailers that I really, really like that I currently own. This is a Costco. Look at that movement. It's just so far over. What did it do last time here in 2022? Where it pulled back. It pulled back. Now, that wasn't a great time in the market either, because those were all-time highs. And now, if you bought here at 596 back on April 2022, and you said, God, I don't know, should I sell for this 40% loss? No, you start adding to it. So if you buy up here and we go down 40%, I wouldn't suggest buying up here, but if you buy up here and we go down 40%, I would simply dollar cost average my way into this. This is a name that is expensive. Make no mistake about it. This is expensive. It's not a cheap stock. As far as Seeking Alpha goes, the quant has it as a hold. Why? Valuation is the only thing. It's the only thing. Now, when you look at the favorite peg forward, it's trading 125%. So they're growing, but it's growing. The earnings aren't keeping up with the growth. So the only thing that will tip this one is a membership increase. And do they finally announce the membership increase with the earnings? That may be the only thing that saves this stock from a nice, pulling back to 700. I think a nice 10% pullback on this one would be rather healthy. Again, 2022, 33% in 6 weeks. But again, the market was different. The consumer is strong now. The consumer was weak back then. Alibaba, single-digit PE and trading below its IPO. With the bar so low, will we see a Tesla-type reaction? Because remember, Tesla threw the baby and the bathwater at the sink, and it shot up after earnings. It since has come back. Does BABA have some type of AI announcement that they do with their earnings where it comes shooting back? The algorithm has you in at 71. Boy, what a freaking trade. You got gaps all the way up on this one. You had the golden cross here. I would say it's probably worth the risk. They're going to announce overnight tonight, I think, after the market close. Let's see. I think it is the market. Let's see. May 14th pre-market. Yeah, it's overnight. They'll announce it in China. It's a Chinese company. It's not a New York Stock Exchange company. But this one's an interesting one. And I will point out, this one is on the weekly chart. It is, the RSI has quickly come up to 60, but the MACD has not come up. Your Bollinger Band cinched up here on the week of April 1st, and it indicated, yes, for the weekly, it was going up. Your 200-day, I will warn you, the 200-day is still moving negative. The 50 period is still moving negative. The only ones that are moving positive are the shorter term duration. So you want to be careful. If we pull this back, let's pull this volume up to the last time it had a nice run up here in January 2023. And we see where people are holding. They're holding right here. But the $70 puts you at a nice shelf. There is not a hell of a lot of volume between 75 and 81, and you're trading at 83. So be very, very careful with BABA. I do think it might be worth the risk. Not a huge risk, but a smaller risk. Now, Alphabet stock dips as Apple moves higher. This is just, hey, Apple was in talks with Google about using Gemini. It leaked that they're also in talks with OpenAI about using that. Who do you want to buy? I would say you own, and I personally own, Apple, Microsoft, and Google. I'm not trimming any of them. Google might be a trim up here because the chart, it does look a little extended. It's down 1.87. But any chance you get to buy this company on a pullback, go back to Peter Lynch's thing, this is the opportunity to get into this name. You don't want to time this on the bottom because Google could come out and all of a sudden Apple announces at WWDC, hey, we're using Gemini. We couldn't come to a deal. Boom, Google just pops. It'll just pop. These things will move incredibly quick. I own all of them. I've said it before, Apple, as it gets towards 200, I will start to trim in my retirement. I've got a covered call strategy out there with Apple that is outdated next year. It is completely personal. I am not putting that out there as a strategy, but the covered call strategy is to protect my portfolio in the fact that if Apple does dip, I at least collect some premium. If it does shoot up, then at least I have a price that I'm willing to let the stock go. And for tax purposes next year, I don't incur that this year, so I can plan next year for it. So it's about planning. There's portfolio plan. If you don't know any of this stuff, do your research. Don't listen to a douche on the internet about it. Do your research and understand what that is. But Apple comprises high 50s, mid to high 50s, maybe 60% of my entire portfolio. It's my savings account. That's my savings account. I love Apple. I don't think it's going to go down. I'm a fanboy. I'm on my iMac with my iPad Pro, my Apple Watch, and my iPhone next to me, and my AirPods are in the other room. I don't have Air Max stuff. These are Bose headphones. I just bought them before the the Air Max came out. But yeah, Apple is one I love. So Alphabet, Apple, read that article. Visa and MasterCard score overweight ratings in the new coverage at Sandpiper. The reason I'm including this is because this article really goes into detail about how the Seeking Alpha quant rating of both of these are hold, how the Seeking Alpha analyst rating is different, and how Wall Street rating is different. This is kind of an interesting one if you want to go down a rabbit hole. If you have Seeking Alpha Premium, you can read all about it, and you can go and look at each one of the quant ratings, Wall Street ratings on each. You can go and just do your research on Visa. Let's see, they give you the quant, they give you the Wall Street, they give you the Seeking Alpha analyst. They give you everything. If you don't have Seeking Alpha Premium, I don't know what you're waiting for. You get 20% off your membership through my link. It's the link down below on Linktree, linktr.ee, Seeking Alpha Premium. You get $50. It's 20% off. And you get a free 7-day trial. So I included this article because it goes into a lot of that stuff. Now, NVIDIA,
Favorite in the AI basket gets a buy rating at Jefferies. Remember, this price target on NVIDIA, I think the street price target is about $1,000. Let's go over to Seeking Alpha. Wall Street still has it as a strong buy. Now, this one, you can look at Wall Street because there's a ton of analysts covering it. 54 analysts in the last 90 days have covered it. 40 say strong buy, 10 have a hold, 4 have a hold and 10 have a buy. You have a 14% upside. The average price target is 1,021. The only problem with NVIDIA is its valuation, but the peg, which factors in price per share and growth, that is at 102. It's trading 47% below its sector. That's pretty good. I like this one. Again, I like NVIDIA. I like it to get to 1,000. I am sitting here holding a bunch of NVIDIA. Have I trimmed it? No. Have I bought more? No. Let's go take a look at the algorithm here. It was trading at over 900 earlier today. It's pulled back. I think the market has seen a little bit of a pullback. Let's see the Qs. Here live. The Qs, yeah, it's only 0.05. We're at 442. Nothing to worry about. But here, NVIDIA putting in a nice little solid platform here between, and I've said it before, 850 and 950. I think that's where your kind of trading range is going to go next Thursday, the 22nd. That is your big Super Bowl day for NVIDIA. The algorithm, you want to listen to the algorithm. That 838, great buy. Do you want to get out? Average win, 20%. So let's see where the average win would take you. If we go to 838 right there and we go to 20%, 20% would take you about up to $1,000 from that 838. So I would guess that we see a pop to $1,000 on earnings. I don't know that for a fact. This is just a guess. Remember, I always say this. What your grandmother is cooking for Christmas dinner, it's priced into the market in January. It's already priced into the market, and the market knows better than you do. So, but on the weekly, you've got a positive. All moving averages are moving positive. You just had this little blip. Now, we could see this blip. Look at this. July of 2023 all the way to October 2023. It just traded in a range. Put in that shelf. Boom. Exploded up. This is one you just want to buy and hold. I don't think it's one that you want to trade. If you want to trade it, get the 4-hour algorithm because it makes you 405%. Provides you some safety. 19 positions over 24 months, not even one trade per month. Your average win is 20%. Your average loss, 5%. You win 63% of the time because it's an upward trajectory. It's a bullish stock. What do you make if you bought and held? 24 months ago, you're up 460%. So again, the algorithm provides you some safety. So NVIDIA there. Palantir outperformed possible even without new government contracts. This is a Seeking Alpha analyst, the beginner investor, who takes a look at Palantir, goes over the overview, goes over the full valuation, goes over everything that you need to know about Palantir. If you're invested in Palantir, you should know these numbers. Conclusion, Palantir still retains its investment appeal. I say Palantir is probably going below 20. It's up 2%. It's at 21. I could be wrong, but I'd say it's going below 20. 25 has been a resistance level for this stock. Now, you haven't started to fill this gap. Remember, the algorithm got you out here on May 9th, and we haven't seen it regain confirmation here in the 4-hour. Your MACD is still moving down. Your RSI completely oversold, but it's moved up to 42. Is this the button hook that you're looking at to get in? Maybe. It's below its 200-day. Now, the 200 period moving average has been a good way to buy this one over the past few months because it constantly pops back over it. Now, this one is a hype rally train, and you want to trade it. I was going over this earlier with some folks on YouTube Live. Here is the weekly chart. And this weekly chart clearly shows this. This goes back to the IPO. Look at that $25 providing you significant floor or ceiling, I should say. That will move to support and it will move to the floor at some point in time. Right now, it's your ceiling. So if you're buying at 21, your ceiling is 25. There are better places in the market to put your money, but if you want to take that chance and have it move, at some point in time, that 25 becomes the floor. They just had their earnings. I would say wait for it, but this article puts it into perspective what you want to do. Don't go out and ask some douche on the internet what he would do with Palantir. You get Seeking Alpha Premium and you get all of these analysis. Now, Giga Cloud Technology. You guys know I bought this one before earnings. Super strong buy. This is by someone other than Steve Kress. This is by another Seeking analyst, Value Kicker. It's not Roaring Kitty. It's Value Kicker. He's not posting a meme of somebody leaning forward. But here is Giga Cloud has ambitions to be the next e-commerce giant. I think this is a great stock. If we look at GCT in the algorithm, you guys know it had a buy, I think at 31, 32, maybe at 38 right before earnings, popped to 40. We're at $35. We're down 4% today. It has fluttered. It has just been going back and forth. I bought at 40 right before because 38 wasn't available to me. I bought at 40. Am I selling this one? No. Alpha picks are long-term buy and hold. If you want alpha picks, you can get it. I save you $50. It's 2 data-driven stocks, alerts you when to sell. The stocks cover multiple sectors, access to all over 20 stocks on day one with the full analysis. I went over this in my newsletter. This newsletter, Creating My Alpha Picks Portfolio, goes over the entire Alpha Picks portfolio. So, and my newsletter is half the price of what Alpha Picks is, by the way. So if you want Alpha Picks, you can get it. It comes with the complete analysis. It's definitely much more in-depth than my newsletter, significantly more in-depth than my newsletter. But this is one of the recent picks, GCT. And I think it's got a super, super upside. If we go and look at GCT in the quant, you can see it's got a strong buy in the quant, strong buy from Wall Street analysts, and a buy from Seeking Alpha analysts. The only ding on this one is the valuation. And the ding is a C. It's not an F. It's a C. If we look at the peg, trailing 12 months, you don't have a forward peg, but you do have trailing 12 months. They're trading 84% below. So I like this one. It's ranked number 1 out of 5. If we go, say you don't want the quant, say you want Wall Street. Well, there's only 2 analysts that cover it. And their average price target, $40. You got 13% upside from that. I wouldn't trade this one. I would buy and hold it. It's a rather new stock. It's a small cap stock. Alpha Picks actually went out and did research on this one. So I like that one. I like that one a lot. Now, one thing that you get when you get Seeking Alpha Premium is you scroll down here. And I thought this was the analysis for you, stock gainers and losers. The latest quant stock buys. There's a couple that caught my eye. First is Snap. Snap has a super strong buy. Nutanix, Nutanix, and TNX. Interesting one. Twilio, which is an alpha pick that is actually down. With Google, which is an alpha pick, which is actually up. Zscaler, Team, and Okta. Those caught my list. But the one that caught my list was Mara. We've talked about Mara. This is a Bitcoin miner. And with the halving, it wasn't that great of a good thing for the miners. This is up 6% today. 6%, $18. I bought this at 26. Is it getting to 26 again? I don't think so in the near term, but I am holding this for the long term so I can write it off against long-term buy and hold stuff. But there's 10 analysts that covered it in the last 90 days. 5 say hold, 1 says sell, 1 says buy, and 3 says strong buys, which gives it a buy rating. Its valuation, A. And the reason is you can look at it. They're not making money. But I do think it's the largest miner out there. This caught my eye. I said, you know what? It's interesting. And that's part of what you get with Seeking Alpha Premium. I really, really like Seeking Alpha Premium. And again, it's not Roaring Kitty. It's not Roaring Kitty. He's posted that thing. And that pushed GME. Let's just go take a look at GME stock. Because GME, again, if you like the 4-hour, if you like trading GME and you like the 4-hour algorithm, go and get it. We're up 90% on GME. It's at $33. $33. Remember, when I started this podcast, we were at 25. If you had the 65-minute algorithm, you could have traded this. Let's just look at the 65-minute algorithm. Because the 65-minute algorithm got you in. This makes you 85% over 8 months on GME. It got you in here. It got you in here at about 15. And what was that? That was, let's see, at $15, 15.8. Let's say you bought it at 15.84. You're up 108% in 3 days. 108%, and that includes a freaking weekend. That includes a weekend. 108%, 65 minutes. You get this when you sign up for a TrendSpider. I email you all of these things. Everything that you need to start trading and start trading safely. Again, this takes emotion out of the trade. Now, I will point out to you, look at the volume levels in this 4 hour. The volume drives price. You are completely overbought on this. The RSI is at what, 100? It's at 89. 89. Remember, it only goes to 100. So, hi, Gary. This is our social request. William Morgan from Spotify asks, thanks as always. My question is about gaps. ADMA. Let's see, ADMA. Shot up 25% on amazing earnings. Will it retrace based on back to technicals? When does a gap not fill? My note on this is pretty good, so I'll just read my note just so you know. Gaps are like old man shorts. Sometimes you see the balls hanging out when they cross and uncross their legs, when they're sitting at the pool. Sometimes you don't see the balls. Sometimes they're just kind of up there. So it's not absolute. For me, you have to know the stock and you have to know the chart, how it trades around gaps. That's what I always say is make yourself familiar with charts. Now, I will tell you, this enormous gap that you have here in the 4 hour, it looks like the gap is from 697 up to 797. You can see there's a gap down here between 4 and 5. Now, I've said it before. I am not a huge pharma person because I just don't know anything about pharma. I don't know anything about this ADMA. It's down 2% today. We can take a look at the quant. I don't know if the quant covers it. Looks like the most recent analyst from yesterday giving ADM Biologic a well-deserved booyah, which is a Jim Cramer thing, FU kind of per se. But let's take a look. The valuation is a D, but let's take a look at Wall Street real quick. There's only 4 analysts that cover it in the last 90 days. All 3 of the 4 have it as a strong buy, and their average price target is $10.50, which presents a 21% upside. Now, when you take a look at the revisions, 4 up on both. All 4 have raised their guidance. So the earnings per share, all 4 have raised their guidance. I would say, the valuation, if you take a look at this one, the valuation is a D. And why is it a D? Well, you can look at the PE forward. It's 24. It's trading. It's a B minus. Trading under that. They're not making money. That's why it's kind of a D. So I don't know the chart. I don't exactly know. And I think I've looked at this one for you before because I wouldn't look at this on my own. And it's up 53% in 472 bars. The algorithm makes you 182% versus 420% over 24 months where you buy and hold. Algorithm has you in. I'd say stay in, but most likely, just based on the last 2 candles, this particular one, you might be coming back to fill the gap. I mean, you very well might be coming to fill it. I don't know that you'll fill it all the way, but it's a bio thing, William. I mean, that your guess is as good as mine. I don't know the chart. My hope is you know the chart better than I do. Because if you know this stock, you know the chart better than I do, and you'll know. And if you've been watching it, you'll know how it reacts to gaps. I can tell you Apple's a gap filler. Apple 100% is a gap filler. So when I see gaps on Apple, I want to buy those gaps. When I see this particular one, I say it's probably going to fill it at some point in time. And my guess is it's right after WWDC. Because if we take a look at the seasonality of Apple, and this is one other thing that TrendSpider gets you. If we just take a look at the week of the year, and let's go back, we're going to go back to 2005. Let's take it back to 2005. This is one of the worst weeks of the year for Apple. So do I think that, we could see a pullback on this one right now with the news that they're getting into bed with either OpenAI or Google. That's a good news for it. But do I think that it's going to come back and pull all the way back? The mean change on this one, let's see. The mean change on this in 35%, all 20 changes were of all 20 changes were positive. So 20 changes were positive over 20 years. There's 20. So only 35% of the 20 were positive. So if we take a look at a month of the year, you can take a look at hour, you can take a look at monthly. Let's take a look at the seasonality, and we'll pull this one back further than 2005. Let's pull this back to 1981, 43 years. Okay, it's a coin flip, 55%. You want to be out of this one in September. You don't want to be in Apple. You want to buy it in September. If you're buying long term, this is when you want to buy it, in September or June around WWDC. And if you're looking to get out of it, then maybe you get out of it during one of these big months in October, maybe January or December. So I like seasonality. I like looking at it, but you have to know the chart that you're doing it. And I do know that Apple, I think it's going to cover that gap at some point in time. I just think that it is. But do I know for sure? No. Apple usually does cover. Look at all the gaps that it's covered before. Look at all the gaps on this thing. Now, you've covered all these gaps behind it. So Sam from Spotify wants me to look at SMH. This is the semiconductor, Vanex semiconductor. It's semiconductors. You're in an AI market. I think you want to buy on every opportunity you can. The 4-hour algorithm has you in at 207. You're at 223. I think you're running up against all-time highs at 229. I think it's a good one. SMH, take a look at the holdings, Sam. This is a great ETF. If you don't want to own NVIDIA, if you don't want to own AMD by itself, and you want to own everything, you don't want to own Qualcomm by itself, just get SMH. Have you ever been let down by SMH? No, even the pullbacks are opportunities to buy. Look at it putting in that shelf. We're going to move higher. Now, the RSI or the MACD is super high up there. The RSI is at 64. Do you want to buy it here? Listen, for long term, say you bought this in December of 2021. You said, oh my God, I got to get this at 152. Well, at 152, you had a long time to wait. You had basically the next time it traded 152 was June of 2023. So you waited almost a year and a half to get back to even. But you did get back to even. That's the point. ETFs are not something you trade. ETFs are something you invest in. So if you have $100, put $25 in today. And then put $25 in next Monday. And then put $25 for the next 4 weeks. Just put $25 in on Mondays. You don't need to make winners every time. And if you lose, it's a choice. You either cut bait or you dollar cost average. Those are your choices. If you're a loser in a trade, don't let it get you down. Everybody loses. I lose a bunch of time. Size matters. So making sure, we talk about this all the time, watering your weeds and cutting your flowers. You want to water your flowers and cut your weeds. Cut out the losers. Keep the winners and add to the winners. They will typically come back. That's why I have the core portfolio. The core portfolio is 35 stocks that you can invest in that will come back. So we talk about Roblox all the time. This one's at 31. It will be 40 again. It will come back to 40. You're at $31. It will come back to 40. This is the trading range that Roblox likes, between 38 and 47. It will come back to 40. You want to buy this one. Do you want to buy it now? It started to cover this gap. The algorithm got you out with a 14% loss. The algorithm loses you 4% on this. I say trade it around 40. So, Sam, I would just tell you SMH. It's a great buy. Jamie from Spotify, WISA. This is WISA Technologies. I have no idea what it is. Let's see. That's a 4-hour chart. There ain't nothing positive about this one. Let's go over here to WISA. And we'll go to the summary. It's performing badly. Take this buy with a grain of salt. There's one analyst. strong buy. 840% upside? No. The valuation is B, but they're not making money. Profitability F. They're losing 165%. They're losing 165% year over year. There's no reason to get into this one. I mean, none. Let's see, performing badly. Let's take a look at what the quant says. WISA momentum F. The company has 1 year performance of down 99%. No reason to get in. Cut the weed. Cut the weed, Jamie. Just cut the weed. Water your winners. Don't water the losers. This one just looks like a loser. Zach, Centene, CNT. I know you're not into healthcare stocks. Thank you, Zach, for listening to that. But this is a strong buy in the quant, has low PE, low PEG, and is ranked number 1 in the industry. Fantastic, Zach. Zach, you listen. See, you listen to me. I love when people listen to me and they say they do their own thing. Yes, strong buy. Only thing that's a thing is C as a growth. And when you look at the growth, take a look at it. It's the revenue year over year. Their revenue is not growing. So what do you want to look at? You want to look at growth, earnings per share, diluted. You can read what these things are. Now, if you've never run a business, if you haven't been in charge of a budget, maybe you don't know what these things are, but you need to read about these and you need to understand accounting terms like this in order to do this. Now, leverage free cash flow, it's not very good, 75% down, but it's a healthcare stock. So it's healthcare. Let's see what they do. Operates a healthcare enterprise that provides program and services, so it's managed care. The company operates Medicaid, Medicare, commercial. Yeah, it's something like that. I don't know much about it. I trust the quant. Here's what you do. You take a look at this and you say, when did it get into a strong buy? It's been a strong buy before here in the 70s. Hasn't worked out a ton. Gets a hold here at 75. Then it moves back to strong buy. Remember, these are just kind of, it looks at these 5 things and then it gives it a rating of a strong buy just based on that. It's not like somebody assigns it a strong buy. So you go and you take a look at Wall Street and you say, hey, there's 18 analysts that have looked at this. They have a 14% upside to 81. It's ranked number 1. If we look at the revisions in the last 90 days, you can see 2 people brought it down. Number of revisions down in the last 90 days. So I don't think it's a bad one. If we look at CNC in the charts and we go to here and we look, it's just kind of trading sideways. I mean, for me, if I believed in this stock, I'd say, hey, I'm going to trade with the, kind of maybe about $75. If we kind of take a look at this, let me pull it back to a weekly so that we can really see the sideways move. And I'll put in here, if you look at this and you say, okay, here's where it provided some resistance at about $77. Here, see how it popped up here in November 2021 and then it came back down and then it just shot up. And here it kind of almost found a floor there and shot up. I'd say between $75 and $77 is where you want to trade it until it gets out of that range. Now, the good news is your 50 period is moving up. Your RSI is at 56 and it's in no man's land. I don't think it's a bad one. Would I trade this one long-term? I'm not that big of a healthcare guy, Zach. I just don't think that I would trade it that long-term. But I think it's kind of like Roblox. Until it can get out of this range on its own, then I'd say that's it. You're looking at an all-time high of $95 and it pulled right back there. That's a nice head and shoulders pattern right there. So, and then it just tanked down and it tanked down. So I would say maybe we're going into a nice head and shoulders pattern now, and this may be the left shoulder. And then you got a head, and then you got another shoulder and another leg down. I don't know. But right now it does look good. Again, the quant has it as a high. Dustin from Facebook, I just signed up for the newsletter and have a question. I'll premise this with background. I've had Zim for over a year. It's finally back up to close to my buy-in average. I don't have much, but is one of my bigger positions. Since it's back to where I won't lose money on it without listening to a douche on the internet, would it be wise to take that and buy into the 5 alpha pick stocks that money? Because until Zim gets back to its whopping 25% dividend, I don't know if it'll get back to where it was years in the past. Does conundrum. So Dustin, here's what Zim is one. This got wrapped up in the hype of supply chain. And so they're a shipper. I don't think you're going back to where shippers actually have pricing power. Now, Zim, I think they bought Eagle, if I'm not mistaken. Are they going back to that huge dividend? Probably not. I would say there's probably not an opportunity for them to actually buy, to give that dividend. If we go back and we look at this one, let's see, no more data. So it looks like it IPO'd back here January 2021, right after the stuff, and it just shot up. Are you going back there? It does look like it's moving positive, but this is a hope and a prayer one. And the reason is we go over here to Seeking Alpha and we type in Zim, and we'll take a look, Zim integrated. Let's see what the quant says about it, if it's rated, because it's a buy in the quant. Valuation A, profitability is the problem. And when you take a look at it, they're making 24% gross profit margin, which is great. Remember, during the pandemic, during that 2021 cycle where they actually rose up and they gave back a bunch of dividends, they had somewhere in the neighborhood of, I think, 75% profit margin. That's it. Their costs have gone up with the Middle East war. So it's a little bit difficult for me to value this one. It's up 5% at 18. I would say it does look positive right now. So I don't know that you necessarily dump it at this point in time. Let's see the 4 hour. 4 hour loses you 50%. Buying and holding this loses you 69%. So you're doing better. I would say your average win is 21%. So let's take a look at where you're at in the algorithm, because you bought at $10 and you're at 18. You're at 68% gain if you bought in the algorithm right now over 20 days. Still have confirmation. You got some gaps. I don't know that you're necessarily going to come back down. You got a golden cross. So I would play the chart on this one and play it with momentum. The question of whether you should buy those 5 alpha picks that I did, sell this one and buy the 5 alpha picks, I would start trimming this one and move to, it doesn't matter that the 5. What matters is you finding quality stocks. Zim is not a quality stock in my mind. This is a shipper that is a small cap. It's not a huge one. Here, we'll go over to FinViz because FinViz is free. Look, they're losing $2.6 billion. They're losing $2.6 billion. They don't have a PE. Will they turn profitable? They might. Their average target price looks like $10.24, and you're at $18.62. Now, they just got an upgrade in January to a $20 price target. I would say around that $20, you want to start trimming. No insiders are really selling. But, they only have 94 million shares floated. That's not a lot of shares. It's an Israeli company. So they got dinged with the Israeli war. But again, I'm not a big believer. The question isn't either or. It's Zim. Should I get out? And I'd say right now you do have some strength. But at that $20, between $19 and $20, I would really think about trimming right now. You've had this huge run, and I'm concerned that maybe these earnings on May 20th, maybe the costs go up. Maybe they're not cash flow positive. Maybe there's something that comes out. That huge move doesn't mean that it won't move higher, but I would say take your profits and move them to a more stable and a better company that's making money. Not necessarily those 5. You don't have to use those 5. The question is, should I get out of Zim? And my answer would be yes. Find the place to get out of Zim. Personally, I don't believe in it. If you believe in it, if like you're a longshoreman or something like that, and you know about these ships, do it. I look at the company losing money, and I say higher for longer is gonna hurt them. There's an Israeli company, so higher for longer will hurt this company because they do need money. So I would say get out. But that's my thing. I don't think it's a conundrum over what to buy. I'd say you that depends on your portfolio. If you want to take those, I don't think that those 5 names that I gave you are going to all of a sudden skyrocket. It's not going to be GameStop. It's not going to be up 109%. But those 5 names are great buy and hold. Remember, Zim is not a buy and hold stock. And your question about, hey, I've had Zim for over a year and it's finally back to close to where I am. That's why you look at these volume levels. That's why if we take this back here and we take this back to the highs, your psychology is everybody's psychology. So if we take this back and we look at this, where are people holding Zim? They're holding it between $9.87 and $13. That's where the large majority are. So they're going to be apt to start selling the second you see weakness. Now, if we take this back and we go here and we look to where the majority of people are holding it from this low on November 27th, the majority of people are holding this between 12 and 13. There's nobody, if we take it back the last time, let's just say this nice little shelf back here in March of 2023. I think this was when they were giving out like 25% and stuff, and it popped. There's nobody holding up there. So you've got to find new buyers who are willing to pay this price for a company that's losing money. That's the market dynamics that you have to find. Meanwhile, you have a ton of people who are sitting here at $12 to $13 who are saying, when's the top? When do I want to find that sucker who's going to buy it at 20? That's the market dynamics in a stock that is not making money. So Dustin, that's what you have to deal with. And so when I say get out, we've moved from 1830 to 1859, just kind of when I've been looking at this. So again, you take a look at this weekly, the RSI is at 69. It is incredibly overbought heading into earnings. I would hate for bad news to the earnings, but with me saying that, it might pop to 25, might pop to 21. I mean, you can see this right here at about 24 is a resistance level. Look at the last time it popped up there, and it just rejected off of that twice. So if you're holding on at 19, figure out the amount of shares that you have, and what's the difference between 19 and 24? If you've got 100 shares of this, say you've got 100 shares of this, and you're sitting there between 19 and 24. That's what, $500? I think there's a safer place to make $500 in the market. That's all I'm saying with Zim. I think that's your main thing of the question. I don't know that you necessarily take it and buy those 5 alpha picks. Again, alpha, I use alpha picks. They say use it a couple of different ways. Here, we'll go over to alpha picks from here. And the way you use alpha picks, and this is why I chose 5, is when you look at it, they say, how can new subscribers get going with alpha picks? Well, buy 5 strong buys. I bought 5 strong buys. 5 strong buys are buys. And there were some that were buys in the quant, and I didn't put those in the 5. But on Sunday, I went over the whole Zoom meeting was about, hey, there's some stocks in this portfolio that are buys that I didn't include in the 5 because they're not strong buys. So you could buy the entire portfolio. Again, if you look at the actual performance of this, 124% versus 38%. But yeah, the reason I picked 5 was this. And because I wanted to be a new subscriber who's going in and doing that. Okay, scans. I'll put those in the newsletter. One that I wanted to point out that is an alpha pick that wasn't in the 5, but it came damn close, but it didn't have a rating, and I was a little bit nervous about buying it. Cardinal Health. We talked about Cardinal Health before. The reason it didn't make the 5, and I want to be clear about this one, Cardinal Health I think is a very good opportunity, but the reason it didn't make the 5 is because it had a death cross. They've already had their earnings. It had a death cross, and you filled this gap up here after the earnings. The earnings were decent. It popped over to up to 106 after the earnings, but then you've lost it and it's gone down. Now, $99.95. You do have confirmation. You do have confirmation over that. The MACD is super low. The RSI is coming off levels of 29 and so. So it doesn't mean that it won't go down, but I just wasn't sure. And when you take a look at the weekly, it's clear we've had quite a run in this. And you can see that the last few times that we've had that 50-day, here you used it as kind of support. It broke down a little bit, but are you upset that you bought this at 53 as it started to rise? Well, maybe if you didn't sell at 78 or you bought at 78, are you upset where it crossed and used the 50-day as support? This one, not quite close enough, kind of just broke down on the 21, but now we're at the 50-day. And so the only reason I didn't do it was because I saw they had already had their earnings and the market wasn't reacting crazy about their earnings. When we go to CAH over here, I want to point this out because this is important. You can see the Wall Street has it as a hold. And when I went and looked at it, 16 analysts over the last 90 days have ranked it. One says strong sell, one says sell. So when you look at this, it's had a hold for quite a while. It hasn't been a strong buy. Even though it's in the Seeking Alpha portfolio and you have a 13% upside, it hasn't been. And the momentum, this is key. This is part of the quant strategy. The momentum is big. 9 month, you're up 6%. That's great. 1 year, you're up 15%. That's fantastic. But 6 months, you're down 5%. In 3 months, momentum is a strong factor. And then you go over and you look at growth, and you can see there's leveraged cash flow and all of their free cash flow. They're not making enough money, even though it's ranked number 1 out of 9 in the quant. And you can see the other healthcare companies. But I wanted to point that out because it does look like a great opportunity on the 4-hour algorithm. But I wanted to point out, take a look at the long term. This could be just a fake out. So I would much rather buy this at 102 as it starts to move upwards than I would at 99 trying to time it. And that's just the way to look at stuff. So again, I am off tomorrow. I am off Wednesday, and I am off Thursday. It's mom time. You might get a newsletter. You might get a surprise thing. But keep an eye on this market. This market is incredibly, incredibly volatile. I'm just looking at stuff. Cleveland Cliffs, $20 stock. It's at $17. It's pulled back quite a bit. You can see the Bollinger Band cinching up. You had a buy here at $17.51. You had the death cross, and you've got a gap above. This one does cover gaps. It will move back up to 20. It starts at $20. It will move back up to 20. If you look at the weekly there, you can see 22 is the clear resistance level. 13 is your support. We can move this up because it's moved up a little bit. About $14 is your support. You're using that 200-day support. Cleveland Cliffs, I like that one. Costco at 782. We talked about it. Google is down 2% at 166. I say anytime you get this one to pull back, you start adding to it. Meta is down 1.3%. I bought FBL, which is a twice levered long ETF on Facebook because it started to fill this gap. Now it's gotten a little bit of a button hook. Looks like it's pulling back a little bit. So, PanW up 1%. Palantir up 1.14%. That one was up even higher before. The Qs, they're up 0.3 at 443. We're at 444 earlier today. SMCI below 800, down 1%. NVIDIA is down 0.09. It's below 900. I think you should buy that one below 900. You can see there's a lot of movement. Uber down 2% at 65. I bought Uber. Great buy last week. Not looking so good now. The gap hasn't been covered. The gap is up here to 69. I think I bought it 67. So I'm probably in the red there. You can't win all the time. You have to make sure that you're just watering your grass, watering your flowers, and cutting your weeds. So I am out of there. Remember, if you want TrendSpider, I've got a special coupon for you. You get my 4-hour algorithm. You get the 65-minute algorithm. You get all the watch lists that I've created. You get all of the scans. You can do all this yourself. All the scans that I include in the newsletter, which is the most important part. Alpha picks, if you want alpha picks. I went over 5. If you want the full portfolio with the full analysis, here's the link. It's 2 data-driven stocks. We'll get one in a couple of days. I probably won't release exactly what it is. I like to protect that portfolio for them, just like I protect the paid newsletter subscribers for mine. Seeking Alpha Premium, this is where you want to do your own work. This is where you want to do your own research. This is exactly what Zach has. And he said, hey, Centene Health, I know you're not into healthcare, but it has a strong buy in the quant, low PE, low PEG. It's ranked number 1 in the industry. He's doing his own research. He knows this stuff. He knows how important this is. You get 20% off your membership. All of these links over here in Daily Stock Pick, Linktree, linktr.ee/Daily Stock Pick. You get all of these links, everything. Even join Webull. Webull's a great platform. I love it. But you get all of those links over here. Anything you want to support me with, it's all over here. You click on one of these, you're supporting me. I thank you for listening. Enjoy. I hope you had a great Mother's Day. My mama is celebrating this week, so I will be in New Jersey. If you have any questions, hit me up. I'll still be responsive on social media. I just probably will not be doing a podcast. So, okay, take care. Bye. Oh, boy. Ugh. Okay, I'm going to delete that one. Move to trash. Let's see. Happy birthday, Scott. Scott, I was just reading last night when I should take Social Security. I was trying to do the calculation because they sent me my statement. And so I was trying to do the calculation of if I take it early and have it for all of those years, do I actually make more money than if I just, because my thing is I want to stay a little bit lower income, but I was doing Roth conversion, IRA to Roth conversion stuff this weekend, and it might just be, it's all a guess. I mean, honestly, it's all a guess. You're just doing your best because you could, try and hold off to 65 and then you die at 62. I don't think it's ever going to run out, Chris. I think that's a fear-mongering thing. I don't think it will ever run out. They'll always find a way to put money back in. But it will be means tested. And so for someone like me who's got rather large net worth, and if it's means tested, I'm going to be pissed. Because they told me, I think yesterday, I mean, I've actually contributed well into the 6 figures into Social Security. And so I would expect that back. My guess is I will not be getting it back. Just from the small calculations that I did, I will not be getting what I put in back. Which hey, I'm all for. I've done really well. I've invested my money. I'm perfectly fine. I do get a little bit pissed that I won't be getting back what I put in. But it's not like I'm going to storm the Capitol. I think 65. If what I read was right, Scott, and you should check with a financial planner on this one because I am not a financial planner, so I'm really only talking about what I read on the internet. But I think it's if you don't need the money and you're in really good health at 65, they say wait until 70. If you're not in such great health, or you're just medium health, or you think, or you get nervous and there's just not enough money there, I think they say take it at 65. I was actually doing the calculation for me at 62. And I think 62 may be where I get better off taking it. But again, if they means test it or change something, and this is where kind of Chris's thing is interesting and kind of an important thing. If you start taking it at 62 and then they means test it, I don't think that they would means test it if you're already taking it. And so that's where I kind of get, okay, I'm probably better off taking it early than late just to kind of get in there. Because, I mean, I'm running right up into those years where it's just kind of, it's going to F up my plan if I, don't take it. So, okay, it's 10:30. I got to get out of here because I got to do stuff. I got to do all this, and I've got to get my house ready. So, housekeeper is coming to clean the house the day before I leave. Great. Okay, take care, you guys. See you. Bye.